Today we'll be looking at what's really happening in the US economy, and I will be giving the latest information from credible sources and data, which is current as of today, August 3rd, 2025. Hi guys, welcome back to my channel, Your Everyday Economics. If you're wondering, are we headed for a recession or are things actually fine? You're not alone. Many of my subscribers have asked this question. So in today's video, we will break down the US economy using the latest data in simple English and wrap up with how you should react with your money, job, and investments in a smart, informed manner, not out of panic or uncertainty or fake news from social media. So we will start first with GDP, which is the main indicator of whether the economy is growing or shrinking. So the US economy is growing stronger than expected. The government's Q2 GDP estimate is sitting around 2.3 to 2.9%. Now we will look at the jobs and unemployment figures. So social media may make us believe that people might be losing jobs. But according to the BLS, which is the official figure for the US economy, labor data, the unemployment is 4% in July, so it's going downwards. And overall, 157,000 jobs were added. There's no doubt that hiring has slowed compared to the crazy post-COVID boom, but companies are still hiring. So if you're looking for work, don't get discouraged. The market hasn't crashed, but it has just normalized. Now let's look at inflation and interest rates. You may be wondering if prices are still killing us. Well, inflation has become that annoying relative that refuses to leave, but the good news is that it is cooling down. CPI, or the headline inflation, is around 2.7%, and core inflation, which excludes more volatile food and energy price movements, is at 2.9%. And this is from the latest BLS July update. Because of that, traders on the CME Fed Watch tool now think the first rate cut could happen in November instead of December this year. So basically, we're entering a hold steady and wait zone. All right, now we will be looking at the housing and mortgage rates. So the housing market is still tight for new buyers, unfortunately, and home prices are up 5% from last year, and this is from the Redfin latest report. But month to month growing is slow. Mortgage rates are averaging 6.65% for 30-year fixed mortgage from last week's data, which is slightly better than 7.5% high of 2023, but it is still very high for first-time home buyers. And housing inventory is rising in places like Austin and Phoenix, but in the Northeast, people are staying put because they have locked into 3% mortgage rates. So the takeaway is that if you must buy right now, negotiate. But if you can wait, rates could soften in the next 6 to 12 months as Fed might be cutting further rates. Now let's look at the overall consumer sentiment. How are people feeling about the US economy? The Conference Board's Consumer Confidence Index sits at 97.2, meaning Americans are feeling cautiously okay, not euphoric, not depressed. What's interesting, though, is that fewer people think jobs will be easy to find, which usually tells that people might be sensing a slowdown on the horizon. But are there any recession risks, as the news headlines may want us to believe? And what are the economists thinking? Well, here is the confusing part. The leading economic index published by the Conference Board fell 2.8% over the first half of 2025, which signals recession risk. But at the same time, a brand new Wall Street Journal survey shows that economists are only seeing a 33% chance of recession versus 45% earlier this year. So we are in this weird spot. We're not booming wildly, but we're not crashing either. And experts are calling it as soft landing. So now comes the million-dollar question. What should you do with all this economic data and jargon that I just talked about? Well, I'll explain this in simple English. So, if you are a consumer, keep a budget. Inflation is lower, but costs are still 15 to 20% higher than pre pandemic level. Also, avoid taking on new high interest debt right now. If you are an investor, stock market is still expensive. S&P 500 index is trading at very high valuations, so always diversify. In fact, this is a great year to lock in 5% plus on treasuries or CDs. Don't try to time stagger your investing. If you are thinking of buying a home, wait if you are flexible because late 2025 may offer better deals. But if you must buy now, focus on value and location, not on fancy finishes. If you own a small business or freelance, plan for slightly softer demand this year. Invest in productivity, AI, automation, marketing, while financing is still available. So, the bottom line is that the US economy is holding up surprisingly well, but it's not booming. This is the time to be smart, steady, and intentional with your money. And let me know in the comments, like, what would you like me to cover? If you have any questions, I can cover them in my next video. And if you found this video helpful, don't forget to hit the like button and subscribe to my channel. My name is Parul. I'm an economist, and I will see you guys in my next video. Take care. Bye.